All right, good morning, everybody. We made it to the other side of NVIDIA's earnings, and they again had really good earnings. It wasn't much of a surprise that they were going to have good earnings, but they didn't delight, it seems, as much as investors wanted them to delight. And I mean, if you check out their numbers, I don't know how you could delight any more than they did. But at some point, you move the goalpost far enough away and it just becomes unattainable. Seems like the consensus, however, is that it's just going to buoy right back up again because they did have stellar, just absolutely phenomenal results. So the market's kind of showing its hand green on the screen around the world, and we expect that NVIDIA is not going to crash and burn from here. It'll hold the line and very much likely continue to the upside. The Dow is up the most, interestingly enough. S&P and the Nasdaq kind of holding back a little bit, and small caps are doing better than both of those are, right behind the Dow, really, if I readjust this. So things are going fine. Hong Kong basically flat. We're looking out now towards the next bit of information, and some of that's going to come in this morning with the job numbers. These aren't the big numbers that we're all worried about, but still, they are numbers of concern. And there's a GDP revision in here too. And that's important. Notice that the numbers are the same, meaning the forecast is the same as the previous. That's an easy number to see change, right? So keep your eye on that one, see if it does get revised. And then we have Bosick in the later part of the day, right before they remove the lock limits on the futures, and we start getting into the market on close orders and all of that, anyways. So, that late in the day, probably not going to be too much concern for most of us. Worth keeping an eye on, though. Uh, Data that we got out of Japan wasn't horrible, or we would be down a lot more. We'd be down, I should say, not a lot more. We'd just straight up be down. If it was bad, things wouldn't look like this. We got the dollar with a little pop to the upside back above 101 again. Had a little bit of a fade in the overnight. It's still underneath that 10-day moving average, just holding the line, right? If we were to zoom out on that, then we would see that that 10 was coming down a little bit at a time. And it's like jumping the fence, right? Let's see if put it on a bigger chart here. So there's a 10 period moving average. This is, I'm taking the time to go through it because correcting, as we've been talking about a lot lately, doesn't just happen with price, it can happen with time. And so, this old phrase, a correction in time, I mean, it's a real thing. And this is a great example of that. It fell really fast. It kind of got ahead of itself and it outran the mean. And then it stayed sideways here, digesting, waiting for that 10 to get caught up. And so, every day that it stayed here, that 10 got closer and closer and closer. Now we're starting to move up, but we're already back to the mean. We didn't really have to move that far to get there because it corrected already. So that 10 has just been working its way down. We've been holding the line, waiting for it. The dollar should have a much easier time getting through the 10 if it's going to get through there. Because we can see this has been happening for a while, right? Since July 1st, when we had that initial breakdown, fought the 10 and couldn't make it, dumped, did it again, dumped. So here we are again, maybe the third time's the charm. The dollar getting below 100. I don't know, man. That's gonna market's gonna feel that. So we continue to keep our eyes on it, especially today. I want to see, how it's going to do with this 10. Is it going to be an immediate rejection and we move on, or are we going to tangle up in it for a couple of days, say finish this week out, start getting into next week? Like, will it hold for September? It's kind of a big deal. Crude is flat and really tight. It's worth a watch. That's a tight range in crude. And we know tight ranges are uh, they're where big moves come from, right? It's where big moves are born. So you could say that this is a pregnant pause if you like that analogy. Either way, it's ready to go. It's a 1 point range, it's relatively tight from 74 to 75. If nothing else looks good today, I'm watching crude for a breakout. As much as they were talking about how bullish it is this morning because we're up, we're really not anywhere, right? We're still where we were yesterday. And I've already had a couple people say, this is a really great trend this morning. It's not a trend if you're still in the same spot you were yesterday. Yeah. We do got auctions today at 11:30 and 1 o'clock. If we have them at any point, 11, 11:30, or 1, then assume that we have them on the other points. So I don't see an 11 o'clock auction today. Just assume that there is one anyways. I know you don't see it, but there's a lot of economic events that show up every day that don't get listed. So just assume that there is one. Call it good. We're getting a lot of Japan data tonight. That little taste that we got yesterday barely scratches the surface. We'll see if we have any surprises here. If you don't use finance juice at all, you're missing out. And it doesn't cost you anything, and I don't get any money out of it, right? I'm not affiliated with these guys, but it's free. Make an account. It doesn't cost you anything. And once you have that account, you can filter the news sources so that you don't see junk from CNN and MSNBC and that trash. And they do a pre-market session prep and then an aftermarket session review so that if moves happened and you're asking, what the heck was that move today? Go and read the session review and see if they know what that big move was. This is a really good way to prepare for the trading day, and their consistency will help you build your consistency. I get asked all the time, how do I know what to look for? Well, I look at the things that I look at, first of all, and then second, look at the things that these guys are looking at. GDP estimates, jobless claims, pending home sales, 2 auctions. Sounds familiar. That's just what we were looking at. Speakers today. We've got speakers out of Europe, and I'm not too worried about Jordan in Basel, but Bosick at Georgia Tech's College of Business. Probably not a big one, right? But there will be Q&A, and that's really important. Q&A is where they can screw up and put their foot in their mouth. So yesterday in the morning briefing, I talked about using the bottom half of this range from Thursday's candle. I didn't know for sure that we were going to get down there, but we tested the range midpoint on Monday. We broke it on Tuesday before we got back above it. Wednesday, we broke it and we went ahead and went to the other side of the range. Wasn't really rocket science, right? To figure out that, hey, if we have a range and we can't go up, the market's getting tired of sitting sideways and it wants to stretch its legs and move around. Where's this going to move around at? The other side of the range. And we went down there. Yay, cheers for that. But it rallied back up again, too, back to its VWAP. Nice run, too, by the way. When you get that sort of move and you're trying to figure out where are we going, one of the targets that you want to have is back to the VWAP on the day. So this range is washed at this point. The only thing that we need out of this is the 111 up here. We still want to keep that zone because when we get to the upside, we got to worry about that liquidity up there. But we've got another zone to worry about now too around this area here. That's a zone of concern. And when we get it all drawn out, looks a bit like that. So any break to the downside today, we're already at the ADR half. And if we get to the ADR half this early in the morning, we can go to the other ADR half by the end of the day. So that's on the table. But any move to the downside has to get through the volatility trigger, yesterday's half back. Then we've got 55.92 cog line. Can't forget those cog lines. And there's a 56.11 cog line, but that's at the volatility trigger. There's a 56.32 cog line, but that's really the half back of Tuesday. So we don't really need to mark those anyways. There's an RTH low of yesterday. I think this might throw a couple people off. We get these sort of situations once in a while. During the regular trading hours, we set this low. And then say like on SPY, you've got this after hours move. Now this is showing it for Globex because it's the futures, but you know, if you're looking at things like SPY, QQQ, you're going to get this extended low and then the data resets because SPY and the Qs, you know, they get the reset around 8 o'clock or so. And it's going to mess with some people today. So don't struggle with it. If it's in the 9:30 to 4, then it's yesterday. Otherwise, count it as Globex or count it as today. And we've got the buy zone down here or buy side liquidity, which I think is a better phrase for it. Every time I write buy zone, someone asks, is that where we're supposed to buy it? That's not necessarily what I meant. It's buy side liquidity. It's where we expect to see buyers step up. And sure, I mean, you could be one of those buyers, but it's not like I'm recommending that you buy there. If we get through that liquidity, then we have the ADR half, which is also another cog line, 55.33. Now we don't have the founder's note for the AM edition yet. Still waiting on that. Maybe we'll get a little bit of clarity out of them on the options levels now going forward. But don't get too hung up on the bullishness yet this morning, because as much as it may seem bullish, we really just ran back up to where we were, and we've got a lot of trash to get through. We spent days building this top up here, and now it's going to be really difficult to get through those levels. That has to be something that we take into consideration. Having said that, when you spend this much time in a range, It's what we call a draw. Bring everybody in. It draws people in. Both sides are thinking that they're right. Bulls and bears, longs and shorts, everybody can get into that range. And then we get the raid. So first you draw everybody in. Longs will have their stops underneath. Shorts will have their stops above. Then we raid those stops, raid the liquidity, and then run through the draw and out the other side. If this was a draw and a raid, then we raided the liquidity and we're on our way through to get out on the other side. So something to consider on that point. If that's the case, we have the ADR upper level. And speaking of ADR, I had someone build this for me. So soon, hopefully, we'll have the ADR levels that you will be able to search for. And I had them add a band around these yellow ones. Be a half of a percent, right? 0.05 on each side. Plus maybe a counter in there and some other neat stuff so that it'll count how many times in the last 10 days we've hit the yellow line, whatever. This is 56.75 basically. So if we get that continued break to the upside through our own ADR half, then we got these sell side liquidity and then the ADR full. It has the juice to do it because we've stayed sideways long enough that we've built that juice up. But on the other hand, there's a lot of levels in here through the middle of those zones that we're going to have to fight to get through. So for the ADR today, 56.72, 56.75, doesn't really matter too much on either one of those. Just keep in mind that phrase, if we get to one side early enough, we can go to the other side by the end of the day. I was going back and looking, and this year's been so wild that we went from the low to the high to the low again in the same day. Wild, right? I mean, that's some pretty big moves. So, just because we're at one edge, don't take that as a bias for the rest of the day. All right, central pivot ranges. We are below the weekly floor pivot, but we're testing it, hitting it now, fighting to get through that level. If we're in this channel, we're not bullish, we're not bearish on the week, right? We got to get outside of that channel before we start to consider it bullish or bearish. So let's get out of that box. Just getting above the weekly, it's not going to be good enough. We need to get above it and get completely out of that weekly channel. The floor pivot, massive gap down, price opened underneath that, which is why it's red. It's negative because it's gapped down. It's not touching yesterday's channel at all, which is also a negative in this case. And the fact that we've ran through it, okay, that's good. We're on the other side of it. But now we've got SNR levels to deal with. So we want to focus on where those SNR levels are at right now. We hit S1. It's not going to be a surprise if we can hit R1, 56.37, which is the upper edge of the weekly channel anyways. And beyond that, to get to an R2, you're looking at higher than our own ADR full. So ADR full is like 56.72 and R2 is at 82. It's a long ways off. I just got feedback on getting the indicator published. Those of you that know, I've tried to submit indicators to TradingView, and they're snarky little jerks about it. And so I had someone else who is a Pine script coder do it, and of course now they're having issues, but it's their realm, not mine. So let's get above that floor pivot. This week is all about surviving Nvidia's earnings. This isn't about reclaiming highs and continuing to run. And remember, September has seasonally been a negative month, right? So you get through Jackson Hole, you have one more week and a half, and then everything gets really negative, except that this is an election year. And that little exception opens the door for the fact that it may not be a negative September, because seasonality is not perfect, right? It's not going to tell you exactly what we're going to get. It just tells you what we typically get. And typically we get a negative September. If that's the case, then running back up, maybe getting into this sell side liquidity across these highs, that 5650 area wouldn't really surprise, right? Get back up there and then sell back off again. Check to make sure this is today's. Yep. All right. So volume certainly looks better this morning than it has, right? Yesterday at 40, day before at 46. It's been really light. This morning we're almost at 90. A lot of good volume in the overnight, which fueled that move up, sure. But it only gets us so far. It is interesting to note that when we got to the ADR, we didn't just reject and fall back down again. If we had, I'd be much more inclined to say we're probably going to go down and hit the lower ADR. But the fact that we pulled away from it and then came back up to it again leads me to believe that we can hold this level into the end of the day, and or we could continue to move. It could be one of those face ripper days where we just keep going and going and going. And if that's the case, the ES is going to get to its ADR levels much sooner than the SPX will. So one tactic that I've seen recently is when we get one of those face ripper days and the ES is just going and going and going and it passes its ADRs and it's still going, I go look at SPY and I go look at the SPX and I see if those have even gotten to the ADR yet. And what I find is typically no, they haven't. And so we keep going up, down, whatever direction it is, we keep going in the ES until SPX and SPY have also hit their ADRs, and then we stop. Keep that tip in mind today if we happen to get one of those runner days and we get all the way to the yellow line, 5672 up here, and we break that and keep going. And we start asking, well, how far is this thing going to go before it stops? Check out the SPX and the SPY, see if they've even made it to the ADR yet. We've got an outsized bar, right? We got outside of last week's high and we got outside of last week's low. It's not an engulfing bar with the body, but it is with the wicks. And it's a topping pattern. It's a negative pattern. So one thing that we would want to see if we want to really maintain this bullish bias is to at least get a blue bar or a green bar on the week, right? We got to get back above that open this week. Call it 56.50. If we can close above that Friday, then this is going to be considered bullish. But that's a tall ask at this point. And it's not like we're trying to get back to 5,700 this week or anything like that. But we don't want this candle closing, one, below its own 50% mark, and two, near the low of the week. We don't want either one of those. And we can use last week as a condition of validation. There's a halfback level that we can focus on. I think our own level at this point is good enough. We could just use our own halfback. But if not, we can use last week's range. We're still above the 10 and the 50 and the 20 and all of that anyways. $56.32 cog line or $56.37 point of control. Either way, we have a lot of resistance up here to get through. I think it's going to be a heck of a fight to get that done. No point of control on the 5-day 5 minutes to deal with. We're going to remove this point of control here because we tagged it yesterday. That was a really nice tag on that point of control. 55.97.5. Now it was an overshoot from 5,600 anyway, so it was a level that you probably had even if you didn't know it was a VPOC. But it's nice when we do get one of those VPOCs though. At this point, we don't have one to carry forward from yesterday, and the next area of current concern is 5640. And I'm still building out a new possible cog line at the 42 area. It's not valid yet, but it takes weeks, months to validate a cog line. So I don't have an answer yet, but 5642 or 5640 is one that is looking more and more like a cog line every day. We're a little higher on we're a little lower on the 10-week than I would want to be. We want to stay in that 2 to 3, maybe 3.5% above the 10-week, and we're at 1.8. This makes sense because while we were staying sideways, the 10-week was catching up to us. It's not that big of a deal, but we want to maintain that sweet spot between, say, 2 and 3.5. So it's not negative, just we're not exactly where I'd want to be. For the 10-day, we are above the 10-day. It's a good start, and really not higher than 1.5 is kind of the goal here. Stay in the green, stay above the 10, but don't exceed 1.5. So we're doing that. I'd like to get a little further away from that 10 maybe, but things are fine on that front. VIX is down. We all expected a volatility crush, however you define volatility. Volatility was expected to come out of the market after this NVIDIA earnings because it was the largest unknown that the entire world was worried about and now they're not because we have the data. Behind that, we got nat gas that's down, no surprise. Triple X semiconductors down, SMH, Mag 7, but we're all expecting that reversal, right? Like we're not expecting NVIDIA to stay weak, stay sideways, and the market did a nice disconnect from it. We do have Bitcoin up this morning. I would be focused on their proxies. If we stay sideways in the indexes, we want something to focus on for some day trades. Could see some moves in the Bitcoin space, Riot, Mara, Hut, Coin, Hood, those kind of names. GameStop was up this morning on some news, and that could hit some short covering rallies, just, fuel that space a little bit. That'd be nice to see. So worth taking a look there. Gold miners, and the China ADR group. So Baba, Baidu, JD, PDD. We got the China ADRs up a little bit. They've been beat down pretty good. They were down more than 7.5%. So careful with the China ADRs. It's very likely just a knee-jerk reaction in the other direction, right? It's just mean reverting a little bit. So what I got for you guys: be careful, be safe, watch the clock, keep your eye on the levels, and I'll see y'all tomorrow.